The first time I covered Plug Power, it was trading around $1.30. Now, it's $1.51. But it's down 28% this year and down 21% in the last 12 months. So the question is the stock dead money or is it setting up for a massive rebound? Because on one hand, just grew revenue 21% year over year, almost 174 million just last quarter. Electrolyzer sales tripled. Margins improving, losses shrinking. But on the other hand, this company is still bleeding over $400 million a year. And some investors, they're running out of patience. Now, here's what I think most people are missing. Plug isn't just selling fuel cells for forklifts anymore. They're building gigawatt-scale hydrogen hubs in places like Georgia and Louisiana. And thanks to new policy credits, they've now got a real shot at scaling before the cash runs out. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing because I'm not here to sell you hype. I break down the numbers so retail investors like you and me can make more smarter decisions with their money. And in this video, I'm going to show you why Plug's partnerships with companies like Amazon, Walmart, and Allied Green could be the lifeline that bulls are counting on. And of course, the one risk that could still crush the stock. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So, is Plug Power a long-term comeback bet, or is it just another hydrogen dream? Let's find out. Plug Power is an alternative energy company that specializes in end-to-end green hydrogen solutions, including electrolyzers, fuel cells, hydrogen plants, and fueling frameworks. It created the first commercially viable market for hydrogen fuel technology. And here's the hook, right? They're not just experimenting with hydrogen, they're trying to build the entire ecosystem around it. Some of its major clients include Amazon, Walmart, and Home Depot. And that demonstrates how Plug Power has gained the trust of major corporations in its products. So you could say that if the biggest retailers in America are betting on hydrogen, well, Plug Power already has its foot in the door. One of its main product lines, its Gen Drive, is a fuel system that powers forklifts. Okay, not sexy, but forklifts move the backbone of supply chains, which means steady demand. Plug Power is also building hydrogen hubs, which will eventually power the entire hydrogen supply chain. It opened gigawatt-scale hydrogen hubs in Georgia and Louisiana just earlier this year. And that is a big move because whoever controls production and infrastructure controls the market. Plug Power stock is currently trading at around $1.51, and here's where it starts to get interesting. The stock is cheap, but the real question is whether it's cheap for a reason. Zooming out, Plug Power stock has been in decline. Its price dropped about 28% year to date and 21% over the last 52 weeks. So the stock is bleeding, but not out of the fight just yet. Compared to its peers like Ballard Power, Bloom Energy, Fuel Cell Energy, and Nikola, Plug Power appears to be trading in the middle of the pack, particularly in terms of its price-to-sales ratio. Sure, there's interest in Plug Power, but on a price-to-sales basis, the valuation isn't as high as, say, others like Ballard or Bloom. And that means investors haven't given up, but they're cautious. So how does Plug Power do financially? Because that's really what drives the stock price. And it's where things really start to get interesting in this story. Plug Power released its second quarter financials last month, and it matched management guidance. Remember, in general, management lays out its goals for future quarters, and this is what investors want to watch for. Plug Power's revenue grew 21% year over year to $174 million, driven by demand for its Gen Drive fuel cells, Gen Fuel hydrogen infrastructure, and its Gen Eco electrolyzer platforms. In fact, electrolyzer revenue tripled year over year, reaching almost $45 million in the second quarter. That's not a small blip. That, folks, is serious growth. Gross margin has also significantly improved. Not only that, the company managed to cut its net losses by 23.75% to $423 million year over year, demonstrating they can effectively manage their losses. So you could say the bleeding is slowing, and that's exactly what Wall Street wants to see. It's also, I think, one of the biggest reasons that the stock is up since my first analysis on the company. So, aside from better resource management, what else could help Plug Power soar once again? Well, for that, we need to look at the catalysts. And here's where it gets exciting, because Plug Power is not standing still. Plug Power has established strategic partnerships that's already generating revenue for the company. For example, the partnership with Allied Green. This is a company that uses Plug Power's electrolyzer technology to power its green ammonia plant in Australia. It'll also use Plug's electrolyzer technology to power a brand new $5.5 billion green chemical production facility in Uzbekistan. Translation: global deals are starting to validate Plug's tech beyond American borders. Plug Power also has ongoing partnerships with a key U.S. industrial gas partner, extending its hydrogen supply agreement through 2030. The deal lowers hydrogen costs, enhances network efficiency, and secures a reliable supply for over 275 customer sites. And this move strengthens Plug's ability to scale strategically while easing near-term operational and financial pressure. And that's the kind of contract that can stabilize a volatile stock. Then we have the big beautiful bill, which restores a 30% investment tax credit for fuel cells through 2032, and also extends the hydrogen production tax credit through 2027. This removes barriers like zero emissions and labor requirements, making credits more accessible. In other words, the government is basically paying companies to use hydrogen. And this is something that's come up in my Discord server. Will policy alone keep Plug afloat without real demand? Well, think of hydrogen as those early solar panels. I mean, subsidies got people to try them, but prices never really came down and real demand never scaled. And that is the risk that Plug now faces, despite policy support. But this time, they're not starting from zero. Plants are being built, big-name customers are on board, and credits like the $3 per kilo hydrogen credit buy them time. If demand picks up even slightly, Plug Power could be one of the first alternative energy companies to scale. Policy alone is not going to guarantee success, but it does give them a real shot. So the million-dollar question now becomes, can subsidies buy them enough time for demand to catch up? That's the question. Now, it may seem like all set for Plug Power to soar, but there is a key issue that it needs to solve. It's profitability problems. And this is where most growth stories collapse. Despite the company's efforts to keep its financials afloat, its net income remains in the red. And that's to be expected somewhat, as Plug Power is undertaking many initiatives at the same time. Sure, it's ramping up hydrogen production, converting gigawatts of engineering contracts into firm orders, cutting costs massively, and trying to achieve profitability for the first time in a while. The One Big Beautiful Bill Act could give Plug Power an allowance to adjust, but that doesn't mean that Plug will suddenly become profitable overnight. If the company does not deliver, the stock is sure to suffer. So you could say that Plug Power is running a race against the clock. Scale before the losses eat them alive. So after all that, is Plug Power stock a buy? Well, consider this. A consensus among 23 Wall Street analysts rate Plug stock a hold. And that's a rating that's been consistent for the last 3 months, with 5 strong buys, 14 holds, and 4 strong sells. There is a high target price of $4.50, suggesting as much as 3 times upside from today's prices. And that's the dream scenario. Triple your money within a year if things go right. For me, I see Plug Power as a potential long-term bet. It's volatile, high risk, and exposed to market and policy shifts. And it makes no money. But it is earning more in sales, and if it can turn those sales into profitability, Plug Power could end up being a comeback stock. If you like what they're doing and believe in their vision, I'd say it could have a place in someone's portfolio using just a smidge of risk capital, but I wouldn't bet the farm, at least not now. Bottom line, Plug Power is a speculation play with real potential, but only if you size it right. So that's my take on Plug Power, but what do you think? Did I get this right? Did I forget something? Do you think their technology could take off to a point where the company finally turns a profit once again? Let me know in the comments below. And while you're there, if you found this video helpful, do hit that like and subscribe button so others will find it as well. That's it for me today. Thank you so much for watching, and I'll see you next time.